Hi, everybody. This is Alan Ellman, the Blue Collar Investor, welcoming you to this video presentation of the BCI Updated and Enhanced Exchange Traded Fund Report. In March of 2023, we updated the report to include our streamlined version of covered call writing we call the CEO strategy, combining exchange traded funds with stock options. So as you will see in this presentation, the middle section of our ETF report is dedicated specifically to that strategy without taking away from any of the other data that we've been providing for you over the last 15 years. So on the screenshot you could see right now is the report dated 3/22/2023. This is the first report that we made after we introduced the CEO strategy. So let's go through all 4 pages of the report. Sometimes there are 5, but let me show you the 4 pages of the report for this particular cycle. Now, as you know, the report is updated weekly, usually midweek. So this was Wednesday, March 22nd. Now, on page 1 of the report, we basically give an overview of how we screen for the exchange traded funds that are eligible from this report. And we give an overview in the first paragraph of what's to come. We show you in this red area over here as part of the key that the top performing ETFs are in section 1 based on 1 and 3 month price performance. The middle section is the select sector spider section dedicated to the CEO strategy, which is based solely on 1 month price performance, not related to the S&P 500. We'll get into that shortly. And the third section are the inverse ETFs, which we would use only in extreme bear market conditions. Now, all 3 of these sections are sorted based on 1 month price performance, and we'll show you that shortly. Next is the spreadsheet key, which lets you know all the abbreviations you see in the report and what they stand for, and a notation to be aware of China-based securities because they lack the transparency of companies based in the United States. And finally, at the bottom of page 1, we give a midweek overall market tone from Investors Business Daily, from Professor Eric Wish's General Market Index, and of course BCI take on the market midweek, and every week this is updated. So that's the bottom part of page 1. Now page 2 is the actual report. I'm going to come back to that shortly. Page 3 gives additional information on the select sector spiders, and it breaks up the S&P 500 into 11 different exchange traded funds, each one geared to a specific sector of the S&P 500. And if you take all 11 of these, they make up all the securities in the S&P 500. So we give you the name and the ticker symbol of each of these securities. Now, scrolling down to the final page of the report, page 4, we talk about the inverse exchange traded funds. And those are the ones, you see them here in bold, that move up when the market moves down. So we use those only in extreme bear market conditions, like we had, for example, in 2008, and to a lesser extent in 2022. But be careful using these because, generally speaking, the market goes up 8 to 10% a year. So most of the time, these will not benefit us. But when we do have an extreme bear market, they certainly can put cash in our pockets. And finally, at the bottom of page 4 of our reports, we talk about the implied volatility statistic that we give in all of our reports. We'll show you that in just a moment. And finally, in red at the very bottom of page 4, I mentioned, because we get this question a lot, that we do not manage our positions based on its disappearance or removal from the following week's report. Once we enter a trade, we manage that trade the way we do with all of our exit strategies. That's in our books and video courses. So once we enter a trade, we don't exit that trade if it's not in the following week's report. We manage the trade. Now, we very well may choose to sell that security because it's grossly underperforming the market, in which case we make a new selection from the most recent report. Okay, now let's get back to the meat and potatoes of this report, which is on page 2. And if there are a lot of eligible securities, it may extend to page 3, in which case it will become a 5-page report. So as you see on the very top of the report, we have the information for the S&P 500 index itself. And we indicate the price of the index, the value of the index at the time that we created the report. And usually it's after market close on Wednesday of that week, sometimes Tuesday or Thursday. If we're traveling or if we have a webinar presentation, we might do it Tuesday and Thursday. But 95% of the time, it'll be after market closes on Wednesday. Then we give the 1 week, 1 month, and 3 month price performance of these securities. Now, on page 1, we indicated that the securities have to have a relative strength of 60% or more, have a average trading volume of 250,000 shares per day, and must have adequate option liquidity as well. That's spelled out on page 1 of the report. Now, we also give the implied volatility statistic of that security. In this case, the S&P 500 was 18.74%. And then our weeklies present. A Y means yes, a blank means no. Now, the top section is the section for all ETFs that meet our criteria, which means that they have to have outperformed the S&P 500 in both 1 month and 3 month time frames. As an example, let's look at the top performer for this particular report, GDX, which after 1 month had gone up in price 11.13% compared to the S&P, which was actually down 1.99%. And they also must have outperformed the S&P in a 3 month time frame. So GDX was up 6.26%, while the S&P was up 3%. So all of these securities in the top section have outperformed the S&P in both 1 and 3 month time frames. Now, let's move down now to the middle section of the report, which is the one that's based on our CEO strategy, a streamlined approach to covered call writing, where the underlying securities considered are only the select sector spiders, the 11 that I showed you earlier in this video. Now, these securities are the best performers of the select sector spiders over the past 1 month only. No specific comparison to the S&P 500. Simply the top select sector performers over the last 1 month. And if we usually give 4, but if 4 and 5 are very close in value based on 1 month price performance, then we include both of them. So for example, here you could see that XLY and XLV over the last 1 month, as I scroll down, is minus over here. Let me just get this specifically. 1 month here, and you could see that over the last 1 month that it's down 365 and 250. So we included both of them, but if you're just looking for 4, you would just include K, C, P, and Y, and then the 5th one is optional. But generally speaking, we like to use 4. Now, if you don't have a lot of cash to invest, let's say you have maybe 40,000 or 25,000, then you might go with just the top 3. But we'll usually list the top 5, knowing that 4 would be the sweet spot. Now, moving down to the bottom section of this report, you'll see that we have the 4 inverse ETFs based on these benchmarks: the Russell 2000, the Dow 30, the S&P 500, and QQQ, which are the top non-financial securities that are listed on the NASDAQ exchange. And these are all short. So if those benchmarks go up, these will go down and vice versa. So we only use these in extreme bear market conditions. And all four are listed on every report. There's no specific criteria that will keep them off the report in any specific week. So they're always included. Now, finally, all three sections are sorted based on 1 month price performance. So you can see on the top section, you'll see 1113 down to minus 0.87. In the middle section, the CEO section, you'll see 3.49 down to a low of minus 365. And in the inverse ETF section, a high of 9.65 to a low of minus 3.81%. Now, the select sector spiders that have in fact outperformed the S&P in both 1 and 3 month time frames will always be found in this top section. As an example, XLC and XLK were outperformers in both time frames for this particular report. Of those 5 select sector spiders listed for the CEO strategy, those 2 you'll find here as well, and then the other 3. So that is our new report format, just scrolling down top to bottom again. So you can see it's informational on page 1, including the midweek market tone, then the meat and potatoes of the report on page 2, sometimes extended to page 3. Page 3, we give information on the select sector spiders, and on page 4, we give information on the inverse ETFs and define for you the implied volatility stat included in all of our reports. So, ladies and gentlemen, premium members, there you have it, our updated and enhanced exchange traded report for our BCI premium members. Ladies and gentlemen, I hope that you enjoyed this video presentation, and I hope this report is an asset to you in enhancing your portfolio returns. As always, this is Alan Ellman, the Blue Collar Investor. Take care, everybody.